Let's talk about the Florida housing market. One headline screams it's crashing, but the next one says it's booming. Prices are cooling down, inventory is finally up, but sales are up too? So what is really going on? In this explainer, we're going to cut right through all that noise, look at the actual data, and give you the real story. Okay, let's get into it.
And that really brings us to the biggest question of all, doesn't it? Are we looking at another 2008-style crash, or is this something else completely? And look, this isn't just some academic debate. The answer could seriously impact your financial future. So let's dig into the numbers and see what's actually happening on the ground.
All right, for this first part, let's just agree to do one thing. Forget the sensational clickbait headlines for a minute. We're going to look at the hard data. You know, the numbers that don't have an agenda. And I think what they show about the Florida market right now might actually surprise you.
Now this is what's so fascinating, because this slide perfectly captures the puzzle we're all trying to solve. It's just a classic case of mixed signals. On one hand, yeah, prices are cooling off and there's more inventory, which should be screaming buyer's market. But then you see this. Pending sales for single-family homes are up over 15%. That's strong demand. And when you add in that foreclosures are near historic lows, the pieces just don't fit that crash narrative. So what gives?
And this quote really hits the nail on the head. That crash story, it's powerful. It absolutely gets clicks, but it's just not what the evidence is showing us. The data is really pointing to a market that's, well, it's normalizing. It's getting back to a more sustainable, more balanced state after years of absolute craziness. Think of it as a rebalancing, not a collapse.
And this chart right here brilliantly shows why this isn't just a repeat of 2008. I mean, back then, you had super loose subprime lending, basically putting people in homes they couldn't afford with little to no equity. Today, it is the complete opposite. Underwriting is strict, and homeowners are sitting on record high amounts of equity. And that equity, that's a massive financial cushion that prevents the kind of foreclosure crisis we saw last time. That is the key difference.
So the big picture is telling us it's more about stabilization than a crash. But you know what they say, all real estate is local, right? So what's actually happening on the ground? Let's zoom in on a really critical region, South Florida, because this is where the real story, the much more nuanced story, is playing out.
First stop, Broward County. Home values are down about 5.5% over the past year. Now this is what a market correction actually looks like. A 5.5% dip is not a 30% freefall. It's a sign that the market is finally taking a breath and cooling off after being red hot for so long.
Now, check out this number from Miami. 94 days. That's how long the typical home is sitting on the market. This is a huge shift from the frantic pace of the last few years where you had to make an offer in 24 hours. It means buyers actually have time to think, to inspect, to negotiate, to make a smart decision without being rushed.
And then you have this number. Whoa. In Miami-Dade, there's a 13.7 months supply of condos for sale right now. Now, to put that in perspective for you, a healthy, balanced market is considered to be around 6 months of supply. So this isn't some small shift. This is a 5-alarm signal of a major oversupply, specifically in that condo market. And that one data point leads us straight to what I think is the single most important insight of this entire explainer. When we talk about the Miami market, we're kind of getting it wrong. It's not one single thing. It is truly a tale of two very, very different markets.
So the whole story is right here on this slide. On one side, you've got single-family homes. Prices there are actually up almost 4% from last year. And the market is pretty balanced, with about 6.4 months of supply. But then you look at condos. Price growth is nearly flat, and you've got that huge 13.7-month oversupply we just talked about. This is the key to understanding South Florida right now. The single-family market is stable, but the condo market is where the serious oversupply and the buyer opportunity is.
Okay, so what do you actually do with all this information? How do you turn this knowledge about the market's different pockets into a smart move for you? Well, that brings us to the next section. Let's build an actionable playbook for anyone trying to navigate this 2026 market. Let me be perfectly clear here. The big story of 2026 is not about some crash that isn't coming. It's all about a fundamental shift. A shift in power from sellers back to buyers. For the first time in what feels like forever, buyers have real, tangible, strategic leverage. The only question is, how do you use it? Okay, so here's the game plan. First, you negotiate. The data shows 80% of sales in Broward are closing below the list price, so you have real room to ask for concessions, like getting the seller to pay your closing costs. Second, you can use those credits to buy down your interest rate. That's where the seller actually pays a fee to the lender to get you a lower rate, which means a lower monthly payment from day one. And third, you think long-term. Secure the house at a price you like today, knowing you've got the option to refinance into a much lower payment if rates drop in the next year or two. So, all this new leverage brings up that classic question, right? With a market like this, is it better to buy now or just keep renting and wait it out? To answer that, we have to look at the math. And I don't just mean the monthly payment. I mean the long-term, 5-year wealth snapshot.
And this is so important. The conversation can't just be about comparing a mortgage check to a rent check. It's got to be about your financial future. We're going to look at total wealth accumulation, how much your net worth actually grows over 5 years as a homeowner versus if you stay a renter. That includes the equity, the appreciation, and paying down your loan.
And, well, the numbers are pretty clear. In this example, for a typical $400,000 Florida home, a homeowner could build around $130,000 in equity in just 5 years. A renter, after paying over $150,000 in rent during that same time, they build exactly zero. That is a massive difference in your personal net worth.
So that's the snapshot of the market right now. But what about tomorrow? I mean, what can we expect from the Florida market over the next few years if you're thinking about a long-term decision? Let's take a look at the forecast.
Well, the forecast really points to a reset, which will then be followed by a gradual recovery. We're seeing a stabilizing market this year, and that's expected to return to more balanced, sustainable growth in the years ahead. The big takeaway here is that the long-term outlook for the Florida market is still strong, and that's mostly because so many people are still moving into the state.
And this really brings us to our final and maybe the most important point. Trying to perfectly time the absolute bottom of any market, it's a fool's errand. You almost always miss the opportunity. The real opportunity is right here, right now. The market is giving leverage to buyers, and the key is to recognize it and then learn how to use it to your advantage.
So the market has shifted. The power is moving back into the buyer's hands. The data is clear. The opportunity is there. So the only real question left is the one you see on the screen. What will you do with it? Thanks for tuning in.